Penny stocks are loaded with risk, but also with opportunity entering the new year. Investors are always on the hunt for cheap stocks. That can be defined by a low valuation or a low stock price. In this video, we'll tell you about 8 best penny stocks to buy now. Number 8. OPKO Health, OPK. mRNA stock will continue its slump, but at $25 it will be a great buy. Trading near $4.50, OPKO Health could be an ideal penny stock for speculators. If shares can find momentum, perhaps the stock can retest the 52-week high from July near $6.50. If it does that, the stock will be good for a 47% rally. On the flip side, $2.90 to $3 has been support. A few years ago, this was a double-digit price stock. Heck, in 2015, shares of OPK stock were trading for more than $19 apiece. The company is leveraging technology with medicine, deploying mass-scale novel coronavirus testing that gives customers a unique ID to access events. Could this quickly become mandatory for planes or events? Possibly, but there's no guarantee it will. Even if it does, COVID-19 will hopefully not be here forever. But that's not all OPKO has going for it. On January 4th, the FDA accepted Pfizer, New York Stock Exchange, PFE, and OPKO's application for treatment in pandemic growth hormone deficiency. While the company is not yet cash flow positive or profitable, OPKO has a solid balance sheet. Total assets of $2.37 billion easily top total liabilities of $747 million. Obviously, the company has to deliver, but it's showing promise. Number 7. Rolls-Royce Holdings, RYCEY. It's looking more and more likely that the world is building pent-up demand to get back to regular life. With a vaccine here and starting to work through the public, it will hopefully only be a matter of time before we return to a state of normalcy. When that happens, vacationers and business travelers alike will be back in the airports and flying like there's no tomorrow. I don't know when, but eventually airlines will be stuffed and cruises will be full. That will spur demand for new jet orders and with it, jet engines, which will get Rolls-Royce back in action. Admittedly, the business has been going through a tough time as a result of the pandemic. But as long as it can hold out, and I think it can, then RYCEY stock could outperform down the stretch. Keep in mind, shares saw a 52-week high of $9.21 less than a year ago. Now the price is hovering above $1.50. Number 6. Outlook Therapeutics, Inc. Shares of Outlook surged in after-hours trading on Tuesday. The company announced that it had closed on its $35 million financing round. GMS Ventures and Investments, an affiliate of Outlook Therapeutics' large stockholder and strategic partner, BioLexis Pte. Limited, purchased directly or through an affiliate $8.36 million of the shares of common stock offered in the offering. Now armed with cash, Outlook is aiming to put the funds towards advancing its ONS-5010. The company is developing ONS-5010/Litineva as the first FDA-approved ophthalmic formulation of bevacizumab (VIKG). The drug for use in retinal indications including wet AMD, DME, and BRVO. Outlook Therapeutics expect to file ONS-5010 with the U.S. FDA as a new BLA under the PHSA 351A regulatory pathway during the second half of the year. All planned clinical trials for ONS-5010/Litineva are fully enrolled or completed. Outlook expects pivotal data towards the middle of this year from an ongoing fully enrolled Phase 3 registration trial on ONS-5010, NORSE 2. Number 5. DHT Holdings, DHT. The cargo ship in the middle of the ocean, DHT Holdings and some of its other shipping peers are starting to fetch a bid. As the world wakes up from its novel coronavirus sleep, demand is going to go through the roof. Personally, I feel that this is an underappreciated story, the resurgence demand for all things pre-coronavirus. When this surge comes back, we should see the world's ports pick up in activity. As a result, shippers should be on investors' radar. Technically, this one just slipped out of penny stock territory. In November, shares cleared the $5 mark and haven't broken below since. Most recently, bulls bid DHT stock up to multi-month highs as shares closed at $5.73 on January 8th. To me, it's still close enough to penny stock territory to be considered in the group. As recently as April 2020, this stock was north of $7. It's definitely possible that DHT Holdings can't maintain momentum and falls back below $5. In that case, $4.50 could be on the table. For now, though, bulls seem to be garnering control. Number 4. Mustang Bio, M-Bio. Mustang Bio is a clinical-stage biopharmaceutical company. Its products include cell and gene therapies. The company was incorporated in 2015 and is based in New York City. A scientist with protective equipment and microscope in a lab. Mustang Bio is a name that some investors may already be familiar with. The clinical-stage biopharma company was flagged on October 28th as one of our 7 cutting-edge biotech stocks to watch. It is focused on potential cures for hematologic cancers, solid tumors, and rare genetic diseases. On that date, shares closed at $2.56, and already the stock is north of $4.50. Obviously, there's been some excitement in the stock ahead of the American Society of Hematology annual meeting, ASH conference, scheduled for mid-January. The company will present data on the non-Hodgkin's lymphoma treatment. This company has shown some real promise. Obviously, biotech is a bit more of an all-or-nothing approach. Typically, these companies are in binary situations where their drug or treatment will either make it to or through phase 3 testing, and the stock will soar or it won't, and it will decline by 50% or more in a single session. Mustang Bio is no different, and that's exactly how investors should approach it. The CEO, Manuel Lichman, is also the company's founder and continues to be a big insider buyer of the stock. In May, he scooped up 180,000 shares, followed by another 153,800 shares in June. In December, Lichman stepped in and bought another 100,000 shares, while director Lindsay Rosenwald bought 200,000 shares. There are 4 firms that follow M-Bio, and they all have it rated as a buy. B. Riley, Cantor Fitzgerald, H.C. Wainwright, and Oppenheimer. The average target price is $11.20. If the shares rallied that high, it would be a gain of more than 145%. Number 3. Real Networks, RNWK. In November, Real Networks put in a very nice base. Over 7 trading sessions and an 8-session span, shares hit a low between $1.22 and $1.24. In the one session that it didn't, shares hit a low of $1.26. Even though RNWK stock has pulled back by about 10% from the recent high, it's still almost 40% above this base. For speculators, perhaps this dip is an opportunity to buy the stock. One problem with penny stocks? Any investor doing their due diligence may have a hard time doing so. Digging through the typical SEC filing is fine and should still cause little to no trouble. However, there is less coverage from the analyst community. For example, there are no consensus estimates for this stock. That can make it hard to judge what type of growth a company may experience. Further, with less scrutiny from investors and analysts, discovering the fraud stocks become more difficult for those less qualified in digging through the numbers. I'm not saying that's the case for Real Networks, just that one's due diligence becomes more difficult. In the most recent quarter, management had this to say, which I found promising. Our commitment to improving business performance led to our 5th consecutive quarter of year-over-year improvement in our adjusted EBITDA loss. Our 2 largest growth opportunities remain our free-to-play games, which grew 60% year-over-year, and the SAFR platform. Number 2, Caixa Bank, CAIXY. Spanish banking group Caixa Bank is an interesting penny stock to consider. With its $17.1 billion market capitalization, this is far from the stock that investors would expect to see on this list. However, it's a name worth digging a little deeper on. Barcelona-based CAIXY stock has had a difficult run. However, the stock is up nicely from its low near 50 cents during the March 2020 sell-off. If it can find some momentum this year, could it get to the $1.75 to $1.85 area where it topped in 2018? If we see the global economic recovery that economists are hoping for this year, banks should be a big beneficiary of a stronger economy. Last month, shareholders voted in favor of the bank's merger with local rival Bankia, in a deal that will form Spain's largest domestic lender. Throw in the fact that this penny stock pays out a 1.9% dividend yield, and investors may have even more reason to take notice. Further, the company is actually profitable. Number 1, Clovis Oncology, CLVS. Image of 2 scientists in lab coats studying results in a lab. Last but not least, we have Clovis Oncology. Investors should be familiar with this name. In July 2017, this stock hit a high above $99 as its market cap pressed the $5 billion mark. CLVS stock was a decently well-known biotech spec play with lots of promise in the oncology space. Now sporting a 52-week low below $4 and currently hovering near $5.50 though, and it's clear things haven't panned out for this name. Remember what we said about Mustang Bio, which is that penny stock biotech companies tend to be an all-or-nothing proposal? Either the plans work out and the stock soars, or they don't and they are total duds. Surprisingly, Clovis is forecast to grow revenue 13% to this year to $161.5 million. In 2021, analysts expect acceleration in growth, up 26.3% to $204 million. If the company can deliver and cut down its cash burn, then this stock could have upside. There have been some negative analyst price targets too, but most recently, H.C. Wainwright analysts slapped a $15 price tag on this name. With a market cap below $500 million, Clovis could also be an M&A candidate for a larger firm looking for potential growth. Its balance sheet is becoming a bit more strained, which is another reason the stock is in penny stock territory. But if it can deliver, there's reason to believe this name could rally. Do let us know in the comment in which one of them you are interested. Please subscribe to the Stock Advisor. Thanks for watching.